Hello, I'm Mehdi and welcome to your Finance TV. Today we're speaking with Steven Bowen and Sandy Jayaraj, the co-founders of The Sustainable Investor. Before we get into the meat of things, I'd like to encourage you to like and subscribe to the channel so you can stay on top of content like this. Gentlemen, I want to welcome you to your Finance TV.
Thanks very much, Mehdi.
So let's dive right in as we've got much to discuss. May I start by asking about your backgrounds? Steven, would you mind kicking us off?
Yeah, sure. So I started as an engineer, a civil engineer. I built things that didn't fall down in earthquakes. And I came to London in the 1990s, very early 1990s, and started in the world of finance. And I've been there for about, 30 odd years since. I started off working in corporate finance, and then I spent quite a lot of time in debt and debt structuring and corporate lending before I found what I think was my true home, which was in asset management. I started off as an analyst and then became a portfolio manager. And I did that for about 8 or 9 years. I worked at some places that have names that people would recognize and one that people wouldn't. And then around probably 5 or 6 years ago, I started to realize that sustainability was going to become a massive investment theme. And I don't mean by that it was going to be important, because that's a completely different thing. It was going to be a big investment theme. And so I joined a mid-sized European investment bank and I set up their sustainability team. And my logic here was really simple, that the transitions we see in energy and agriculture and our built environment and pretty much every industry that we see are going to change companies' business models. They're going to dramatically change companies' business models. And so as an investor, you need to start to think about what makes the best investment. And that's the companies that anticipate those changes and they prepare for them, and they change their offering and they change their services and their goods. So organizations that do this probably won't fail. Organizations that don't change probably will. So that's my background.
Well, thank you for that. I appreciate that. And Sandy, what about you?
Yeah, thanks, Mehdi. Similar to Stephen, actually, I had a very similar start. I studied engineering at university, sponsored by the Ministry of Defence. But unlike Stephen, I decided I wanted a change of tack when I graduated. So I wasn't 100% sure what I wanted to do, but I thought, let's get a business qualification. So I joined Pricewaterhouse, as it was then, PwC now, originally in audit, ended up doing some due diligence work, some time in learning development in both London and in the US. And then actually a chance encounter, actually more specifically, I physically bumped into an old colleague of mine on the street. And she had been recently working at Morgan Stanley as a pharmaceutical specialist. I had no idea what that meant, so went along to find out a bit more. And before I knew it, I had a bunch of interviews and started working. Ended up spending 18 years in total at Morgan Stanley, both in London and in Hong Kong, a bunch of different roles. So I was a media and tech specialist salesman. I moved to Hong Kong and set up and managed a content development team there. And the aim there was really to pull together all the different ideas that have been generated across all the different Asian offices, different teams, asset classes, etc., and just try and get the whole firm moving in lockstep to monetize those ideas as best we could. And then when I came back from Hong Kong, I joined the Asian sales desk in London. And then my final role at Morgan Stanley was setting up and running, I suppose for want of a better word, a quant sales team, but it was one with a little bit of a difference. So the remit was, okay, we've got great quantitative assets at Morgan Stanley. We also have really strong fundamental franchise. How can we monetize that together as well in the best way possible? So in simple terms, I help quantitative hedge funds understand fundamental investing, and I helped fundamental funds understand alternative data, quantitative techniques. And then an opportunity came to join Curation as COO from someone you know well, Nick Feingold, founder. And really, he got me on board to help him focus and scale the business. And then I later become CEO. And at that point, I tried to find how we could evolve how curation added value. So going from a pure curating to adding insightful commentary to then lateral thinking and sort of joining disparate themes together. So really bringing out our sustainability knowledge as well. And really, if I was to summarize, the common thread between all of the jobs that I've done really are two things. So first of all, helping people understand sometimes quite complex topics, but in an easy to digest way. And the second thing really is helping people think holistically and laterally, which I think is particularly important with sustainability.
That's great. And, I have to throw in the fact that I also studied engineering, electrical engineering, and it's quite funny to have three of us as qualified engineers and none of us actual active engineers, but it is what it is. I guess that's the way of the world. So, Sandy, how did the two of you connect and co-found the Sustainable Investor?
Well, I'll let Steven answer that.
Yeah, if I take that one, us connecting up was one of those lucky coincidences or circumstances. We've known each other about at least 10 years now, and that dates from when I was interested in investing in tech. And I really felt I needed to find a tech specialist who also understood Asia. And at the time, that was a really rare beast because we thought it was important because Asia was where a lot of the change was coming from. And so we needed to understand both bits. And our Morgan Stanley salesperson introduced me to Sandy, and we got on really well, and we talked a lot over the years. And then I met Sandy again, probably about 7 or 8 years later. I was working in the investment bank. We were setting up the sustainability team, and Sandy was running curation. And we were looking at working out if there was a way that we could work together, that we could build out from an investment banking side, we could build out our client education services. So we were talking to the curation team. And it didn't really work out then, but when Sandy then decided to move on from curation, I jumped at the chance to work with them again, because I think we have very complementary skills and very complementary ways of thinking about things. I'm fundamentally an activist investor. And if you know many activist investors, we're very details focused. We get down into understanding how a business works and what we want to change, and then we try to drive that change to happen. And I think Sandy brings a very different type of skill set, which is very complementary. And some of that's from his time in Asia, but I think also in terms of running curation, he has a really good understanding of how you get clients to grasp often complex topics and to help them understand that it can make sense. You don't have to simplify it to the point where it's basically oversimplified. And so that's a skill set that balances really well with my attention to detail. And I think you put the two together and you get a really good combination.
That does sound like a very good and successful combination. So congratulations. I'm glad you both met or met up, connected. So your mission statement is the sustainable investor where sustainability meets finance. Now, this has been a goal for a lot of firms out there over the last several years. And often it feels like sustainability and finance just simply are at odds with each other. How would you say you're approaching this?
Perhaps I can take the beginning of this and then Sandy
Sure.
can talk a little bit more. But one of the things we really noticed from our businesses was that you have two very separate silos most of the time. You have sustainability people who have real expertise in whatever their area happens to be. It might be the environment, it might be social factors, it might be demographics. What they're really good at it. They understand that, but they don't really understand how finance works. And then on the other side, you've got the finance people, and they're very smart. They understand how the finance industry works. But to them, sustainability is a bit of a black box. It's one of those things that they don't really understand. And the way we think about it is that there is going to be a whole series of transitions that are going to take place. Some of the things are going to be governments and wider society are going to have to make some changes. They're going to bring in, for instance, carbon pricing or whatever they decide is the right thing to do. But there's also going to be a lot of areas where finance can apply the things that we know and understand, which is how do you allocate capital. And the way we think about that is these changes are going to throw up a whole lot of risks and a whole lot of opportunities. The opportunities, finance industry is really good at capturing, right? And the risks are things that we traditionally have a way of bringing into our analysis. But going forward, we're going to have to bring in some new factors. We're going to have to understand how social change and how politics and how regulation are going to mean that the world is going to look very different in the future. And so we want to make sure that the businesses that we invest in as an industry are the ones that are most able to adapt and change. So that's where we think that finance can bring something positive. I think it also means that we need to think as investors, we need to think very differently about what creates competitive advantage. And we all know the stories about companies like Nokia and Blockbuster, and if you go way back, the people who made buggy whips and horse-drawn carts, you were faced them with a change in your external environment, and you had one of two responses. You could either keep on doing the same thing you were doing, and you were probably going to quietly fade away and die, or you could start to understand those changes and you could start to adapt to them. And that's where you have organizations like Apple and Microsoft who saw the opportunity and grasped it. And so that's one aspect, I think, where finance and sustainability can fit together, but they need to do it in that wider framework of what governments and society is looking for.
That makes a lot of sense. Thank you, Stephen. And Sandy, did you have anything you wanted to add to that?
Yeah, I think just sort of taking that last point that Stephen made, that linkage between the investment community and government, society, community as a whole, it's a neat segue into things like impact investing. And within sustainability, I mean, invested capital can have a big impact. And we've seen that grown quite materially over the last decade, and particularly the last couple of years. But it's an interesting area, right? Doing well by doing good is the mantra, but it's a kind of careful balance. And I think what's clear is that there often is that trade-off. So there's a sacrificing of some direct immediate return for longer term benefits of society as a whole, but that still is good for the investor. It's got the effect of reducing overall risk by reducing draw on services or improving local productivity of the local economy. And I've got some numbers to back that up, actually. So there's some a University of California research piece from 2019, Barber, Morse, and Yasuda, and they looked at impact funds and non-impact funds. And what they found is that the median IRR for growth and VC impact funds was 6.4%, but actually it was 7.4% for impact agnostic funds, so slightly lower return. But if we look at the bigger picture, bring another piece of research in, Vivid Economics did this for WaterAid, that what they estimate is that for every $1 invested in, improving basic sanitation, access to water, hygiene, etc., actually delivered around $21 of return in terms of improvements to quality of life, reduce pollution, reduce healthcare, etc. We can also look at that at insurance. This is something else we've written about recently, and in fact several times. You look at an insurance business, they've got underwriting and they've got investing. But actually the two can help each other. So imagine the investing of an insurance company investing in some sort of sustainability innovation, either reducing the risk of flooding or something similar. I mean, that in turn reduces the underwriting risk as well for the insurance company. So they make a return on the investment and also they have lower underwriting risk. And I think really it's between myself and Stephen, it's having that deep finance and sustainability experience has been really helpful in allowing us to join the dots like that.
That's great. So everyone has their secret sauce. What would you say your secret sauce is and the main point of differentiation from your peers?
Yeah, I think it's a really good question, and it's one that Sandy and I talked about a lot when we started the business. Obviously, as Sandy said earlier, we have that combination of very deep finance and sustainability expertise. And I think we have found that that's quite a rare combination out there, that most people fit in one camp or the other. But I think what makes us really different is our ability to think about sustainability issues from a finance perspective. And why why that's important is that we all know that governments and society are going to set the framework in which the way that we're going to develop over the next 10, 20 years. And there's all sorts of changes that society wants to happen. But the government alone is not going to be able to fund those. They're going to need an enormous amount of private sector finance to come in to make these changes real, to make these changes actually happen. And that's where I think the finance perspective becomes really important, because you have that ability to say, if you want that to happen, then this is the kind of framework within which it has to occur. You have to work out a way of making those changes work on a financial perspective as well as a societal perspective. We did some work recently for one of the NGOs, and they were looking at decarbonisation of the chemical industry. And one of the conclusions we helped them come to is that the change is going to happen in that industry. The question is, how do you put all of the financial pieces of the jigsaw together so it makes sense for both wider society and for the companies involved? And you start to find a pathway that navigates through that quite difficult challenge. So I think that's the big difference.
That makes absolute sense. Thank you for that, Stephen. And Sandy, you cover a wide range of clients, and you have having a tiered offering seems to be very helpful from a service perspective. You have the primers, which should interest everyone and give people a taste of your differentiated thinking. Then you have a deeper offering of long blogs and more bespoke product. Is that fair? Kind of an encapsulation of your offering?
Yeah, that is, Mehdi. It's very good. I mean, we cover quite a broad range of clients. I mean, something I found at Curation is that companies, organizations, that they all seem to struggle to build the right level of understanding within sustainability, both at that very initial stage of discovery, but also on an ongoing basis. So how do they keep up with the development of these themes? Because these aren't static, although they're long run themes. There's an ongoing change, an ongoing transition. So as well as the initial knowledge, it's keeping up to date as well. And I saw that especially within corporates. And Stephen, you used to see that on the asset management side as well.
Yeah, it was interesting, not just for the asset managers, but also for the asset owners, the people who actually provide the capital, so the pension funds and the private wealth and the endowments and people like that. They really struggle with what are quite complex challenges. And I think as an industry, we tended to try and oversimplify. We tended to say that ESG scoring is the answer. We measure the ESG impact of our fund, and the number is 74, and that's better than this fund, which has got a number of 68. And that was fine for some asset owners for a while, but they've started to realize that actually it didn't quite do what it said on the tin, that thinking about it from an ESG perspective didn't really deliver the kind of change that they were hoping for, both in terms of societal change, which we talked about before, but also in terms of making the companies that they were invested in more responsive, continuing to keep that competitive advantage by positively reacting to those changes. And so what we've been doing is a lot of work with asset managers and asset owners to just help them understand that sustainability investing is very different from just ESG scoring. It's much more akin to the traditional investing skill, but thinking about it through a sustainability lens. And it's a separate piece of work that we do largely on a bespoke basis for clients. So they come to us and they go, we're really interested in understanding what's going on in this particular sector. And we can help them bring together all of the trade-offs and compromises they need to make, and all the risks and the opportunities. But it's always from a financial perspective, because I think that even if you want to invest in a way that aligns with your values and you're prepared to take a slightly lower return or materially lower return, you still need to understand the financial implications of those decisions.
Absolutely. And Stephen, what type of topics are you covering in each of these?
Yeah, it's a really good question, because it kind of goes back to the ESG question that we touched on before, which is that sustainable investing ESG investing isn't really a single topic. There isn't a single rule that goes, if you do A, B, and C, you're going to be fine. And so we tend to break sustainability down into a number of themes, which we put in some bigger buckets. So we've got what we call natural capital, which is everything around agriculture and land use. And that's becoming an increasingly important issue for many, particularly asset owners, with the rise of concerns about biodiversity. And then we've got the energy sector, and that's everything from renewables through electrification to alternative feedstocks for industry to energy sources in heavy industry. And if you think about some of those, electrification is a lot more than just building more renewables. You know, it's not about just building wind farms and building solar farms. It's about having the right interconnectors. It's about electricity storage. It's about grid stability. And it's about demand management. So there's a big industry in there. And then heavy industry is a particularly difficult challenge for investors because of the long time horizon. And so we help them understand the sort of changes that are likely to take place and over what time scale. And heavy industry is a really interesting one. It's an area where a lot more work is needed. But we also tackle that third cog, which is around social change. And I think it's worth spending a little bit of time on that one because it's become quite controversial, particularly in the US, less so in Europe. But there's a lot of talk about what gets called woke investing. And we think to a large extent that kind of misses the point. Because if you think about how businesses, how corporations and companies have thrived over the long run, it's by providing solutions to the problems that society faces. They provide goods and services that people want to buy. And you think about how Apple succeeded, or you think about how Microsoft succeeded. You know, they didn't start off by going, we don't care what the consumer wants. They started off by going, what goods and services do they actually want? For whatever reason, we don't care what that reason is. What goods and services do they want, and how do we provide them in a way that is the most financially advantageous to us? And in a way, we would argue that the social factors that go into the whole sustainability debate are actually something that fits in that box rather than the woke box, that you really do need to care about what consumers want to buy, why they want to buy it, what's happening with demographics, what's happening with human rights legislation, all of those things. You need to understand them because they should make a difference to how you think about your investing process and how you think about your process of building competitive advantage. So that's our third cog. So we've got natural capital and agriculture, we've got the energy systems, and then we've got the social factors.
Great. Thank you for that, Stephen. Really appreciate that. And obviously having the visual behind you there, it kind of
Yes.
stuck in your head as well. So no, that was great. Thank you. And Sandy, who do you say your customers are, and who should actually be seeking your services?
Well, I think as Stephen said earlier and alluded to, we essentially do two things. So on the one hand, we help sustainability people understand what needs to change to make sustainability financially viable. So help sustainability people understand finance. And on the other hand, we help finance people understand how sustainability is really going to fundamentally change decision making, and understand these transitions. So our customers really are anyone that's involved in decision making, particularly strategic decision making, or supporting it. So corporate strategy, C-suite, but also consultants, independent financial advisors, investor relations, comms people, and then of course investors and asset owners like family offices. So that's broadly the group, and we've purposely designed our content and our insights to be accessible in a number of ways. So we effectively have three tiers of membership, for want of a better word. So we've got our free membership, which essentially gets you access to all of our shorter form content. So we have perspectives that are perhaps a little bit more reactive. So it's us commenting on some recent developments or news flow within sustainability, or some recent research, and giving our lateral view and why we think something is important. Our quick insights, these are sort of designed to be bite-sized educational pieces. They're really designed to stimulate interest and sort of try and entice people to try and explore these topics further. And of course, as part of the free membership, you also get previews of our longer form blogs. And that's really where the premium membership comes in. So with a premium membership, you get access to all of our content and also the ability to comment on our blogs as well and feedback into the premium sustainability investor community. And we've purposely made this quite an accessible price. So it's just £250 per person per year. So it's less than £1 a day. And then the final tier level is what we call professional. And this is really our bespoke writing. So to give you an example, there's an asset manager that we're talking with who has bought some premium memberships for his team, but also likes the way that we think and likes the way that we write, but wants us to turn our lens to a particular topic that he's really focused on. And for a typical bespoke blog or report, 3,000 words, we typically charge £3,000 per report, or we charge £20,000 for 10 reports. So we can also be brought on a retainer basis as well.
That's great, Sandy. Thank you very much for breaking that down for us. And Stephen, I'd like to wrap with what's next.
Yeah, I mean, clearly we've got a lot on just doing the things that we've talked about with you so far. But there is one thing that we're starting to work on, so kind of project for 2023, and that's what we think of as education. Now, I know a lot of what we do in our core business is education, but we have a semi one-on-one relationship. You know, you're a subscriber or you're a professional client, and we interact with you that way. And what we've been thinking about are there ways that we can reach a much broader audience? And the reason we're thinking about this is that if you're on the coal face of this, you know, you're a financial advisor, or you're a sustainability person who wants to get into sustainability finance, or you're a family office who's thinking about how they can get involved in this, you don't actually know what your problem is because you can't define the problem, so you don't know what solution you want. So we're talking to all sorts of people who deal with those groups about ways that we can perhaps, we hate the word mass market, but how we can reach a bigger audience through some sort of perhaps online-based platform where combination of blogs and podcasts and presentations and things like that, so that they can build up their level of education so that they can get a better job, or they can make better choices around their investments, or they can think about how they invest their family money in a different way without having to get into that one-on-one relationship with us. It's trying to get out to more people, basically. We think it's a really exciting opportunity, but we're just struggling to work out just how you find that key that turns it from it's a good idea to actually making it a practice. So, you know, if you or the people who watch this can think of ways of doing that, or they can think of contacts or funders that might want to get involved with that, then we're really open to ideas. It's something we're going to work on for this year, because we think as sustainability investing becomes more and more important, we think it's going to be a really big issue, not just in Europe, but in India, in Southeast Asia, in Latin America, and Africa. We can't cover all of that.
Well, it sounds like you're making headway and trying to. So congratulations on all that you've achieved so far. And it sounds like you have your hands full for 2023 for sure. So lots to look forward to from the Sustainable Investor. So thank you, gents, for sharing your thoughts and talking to us about the Sustainable Investor.
Thanks, Mehdi.
And I want to thank our viewers for taking time to watch Your Finance TV and learn more about the Sustainable Investor. So don't forget, you can see the link below to sign up to the free newsletter, and then maybe become a subscriber of the larger form content as well. So check it out. I would urge you to do so. It's great reading and very educational. Until next time, thank you for watching, and good luck investing.